All right, guys. All right. Okay. We are here again. We are back again. Today is September 16. It's September 16, and we are proceeding with our program, guys. We are proceeding with our mentorship program. Make sure if you have a friend out there who is struggling with Forex, please recommend this program to them because it will assist them to keep themselves with the proper knowledge in the Forex market. It's very important, guys, to have somebody to guide you in doing this business. You know, even myself, I have a mentor. See, so I'm doing this to you, but I have my own mentor, guys. It didn't just happen to me just like that I know everything. No, I had a mentor. I had somebody whom I was following. So I got to learn a lot of stuff from him, and a lot of other issues. It's just my own experience in the market. So what I'm sharing with you here right now, guys, is something that's very potential. It's very important, and it will help you to do better in your in this business. Wow, we have a few minutes to start, and maybe we can give some more room for other people to join us. Maybe we can give some more room for other people to join us. Okay. Maybe we can wait for some other people to join us before we start. At least if we are 10, we can start. We can start. At least when we are 10, we can start. All right, guys. Okay. I want to hear any kind of feedback from what we have already covered so far. Remember, we have done the thing concerning support and resistance. We already covered that part. We also already covered the part concerning what was it? Was it Fibonacci? Was it chart patterns? Of course, it was chart patterns. So we have covered the issue concerning support and resistance, the part concerning the support and resistance. We have also covered the part concerning chart patterns. So I'm very much sure that right now you guys knows better how to use support and resistance, how to identify support and resistance, and how to use it in your trading. And also, I'm very much sure now you are full aware of how to identify chart patterns and how to apply or how to use it in your so if we have any problem in those areas, please do not hesitate to ask. That's why I'm here for you guys. I'm here for you. If you have any problem in those areas, please do not hesitate to ask. You ask, I you ask. That's what I'm here for. If you remain with your problem, that means there will be nobody to solve it. We're here to solve problem. So that's the essence behind this program. That's the essence behind this program. So if we are here to have any question, please do not hesitate to ask. If you have trouble somewhere or in understanding something, please do not hesitate to ask. So the number is growing. We are now about near to 10 people right now. Maybe we can just give some more minutes, or we can give some more room to others to join us. All right, guys. So can I get any feedback? If you appreciate what we have already done, if you appreciate what we have already covered so far, and you can see how it works, and you can see how it has been working in the market, you can just write something on your chat page, on the chat page on your right. You can write something there. Do you think that what we are learning here has a positive impact in your trading? If yes, please just write something on the right, on the chat page on your right. Write something there. If it's yes, please let me know. I want to know. You can just write something there. If what we are learning here has got some impact in your trading, and you can see the impact. You know, today I shared some of the opportunities that happened in the market, and you can see most of the opportunity that I shared are from what we already covered, chart patterns, the part of chart patterns. So today, most of my trades that I took in the market just came from just looking at the chart patterns that formed in the market. Double bottom, head and shoulder, inverse of head and shoulder. You can see triple top, triple bottom. So out of those patterns, I was able to take my trades, and you can see I was able to make some good money out of those trades. So it's very important, guys. It's very important for you to work on what we are doing here. You must work on what we are, and we must work on what we are learning from this platform. All right, now I think we can start. So today we are going to discuss two important party, or two important areas in the market, two important issues in the Forex market. And if you have gone through our course outline, you know that the next part that we need to discuss about is a trending market, how to identify a trending market, or if the market is trending, and how to draw trend lines so that you can see clearly that this is now a trending market. But also we cover the part concerning ranging market. We're going to deal on identifying the ranging market and how to put it in a way that you can see now this is a ranging market. It's very important, guys. It's very important for you to understand those two things, and I'm here to take you through. But before we go to trending market, and ranging market, we have to discuss 4 important stages of the market before we move to those areas. 4 important stages of the market, guys. Every trader has to know about these 4 stages of the market. You need to know when you are looking at the market, you need actually to know where the market is, at which stage the market is. You need to know that. It's very important, because if you don't know that, that means you'll be trading blindly. But you need to understand, when you're looking at the market, you need to understand at which stage the market is in that moment. You have to understand. So you need to understand if the market is in accumulation stage, or the market is at an advancing stage, or the market is at a distribution stage, or the market is at a declining stage. Those are the important 4 stages of the market. You see, what is accumulation stage? Accumulation stage is the stage of the market which happens before the market starts going up. This accumulation stage happens somewhere below the market, before market start rising or start creating an uptrend. Before the uptrend, we have accumulation stage. The market tended to accumulate a lot of contract in order to find enough liquidity to move. You see, guys, so it's very important for you to understand about this accumulation stage. At this accumulation stage is where stop hunts happens. It's where there is a false move, false breakouts at this stage. Remember, accumulation stage occurs somewhere below the market at the demand zone. I hope by now you know what is demand zone. So accumulation stage occurs at the demand zone, somewhere at the support before the market start rising up, before the market start going up. And what is the purpose of accumulation stage? And why is it called accumulation stage? Because the purpose of accumulation stage is to collect as many contracts as possible, is to accumulate as many positions as possible, so that to find enough liquidity for the market to move upward. So this is the accumulation stage. Other people refer to this as a ranging market kind of consolidation, but we call it accumulation stage. Now, let's go to advanced stage. I'll come to show you the example of accumulation stage and the advanced stage. Let's go to another stage, which is an advanced stage. Advanced stage is the stage that follows after accumulation stage. Now, advanced stage is an upward movement of the market from the accumulation stage. After the market has done with accumulation stage, now it will start going up, it start rising up, it start moving up. So the move to the moon, we call it advancing stage. The market now starts to move upward quickly and with strong, long candlestick. You see? So this is what we call advancing stage. We have another stage we call distribution stage. Distribution stage is the stage that occurs after the market has completed advanced stage, or after the market has completed an uptrend. So after the uptrend is over, the market now will move into distribution stage. Other people may call it consolidation, or you may call it ranging market. You see, so guys, so distribution stage is the same to accumulation stage, but the opposite of each other. Why? Because accumulation stage occurs somewhere at the demand zone, while distribution stage occurs somewhere at the supply zone. That's why it's called distribution stage. After distribution stage, the last stage that follows is the cleaning stage. The cleaning stage is the falling stage. It's the stage that follows after distribution stage. It's the stage that is also known as downtrend. The market starts now going down. The market starts now going down, creating a downtrend. That is called the cleaning stage. Now, every time when you look at the market must be in either one of these stages. The market cannot be somewhere hanging somewhere unknown. The market always will be in either accumulation stage or advanced stage or distribution stage or the cleaning stage. Now, knowing where the market is or at which stage the market is, it will help you much to know what action to take in the market. Is it to buy or to sell or to wait? You know, these stages can tell you something, guys. These stages can help you to make a decision. If you see advanced stage has gone too far, that is a signal that you should wait. You should wait for distribution stage, and once there is a distribution stage, you know now what follows is what? The cleaning stage. That's very important. If the market is now at the accumulation stage, that means what you'll be looking at is a buying opportunity. If the market is now at the distribution stage, at the supply zone, that means what we'll be looking at is a bearish opportunity. You know what I'm saying, guys? So understanding of these stages, 4 stages of the market, help you guys very much in knowing the market, in understanding the market. You have to understand the market, guys. When looking at the chart on your MetaTrader 4, you have to get information just by looking. You get a lot of information. What am I looking at? The market at which stage? You get it in your mind. You get everything. Once everything is now in your mind, you know what action to take. You know, is it to wait or to take a trade or to do whatever you want to do, but you will make a right decision because you know at which stage the market is. So those are the 4 stages. Now, these stages will help us to discuss very well about trending market and ranging market. By now, you should know that trending market is represented by advancing stage and declining stage, because advancing stage is an uptrend, declining stage is a downtrend. And ranging market or consolidation kind of can be represented by accumulation stage and distribution stage. The difference between accumulation stage and distribution stage is what? Accumulation stage happens somewhere at the demand zone, distribution stage happens at the supply zone. It's very important for you guys to understand those things, because if you don't understand those things, you will not understand the market. Are we there, guys? Are we there, guys? I want to know if we are there. If we are there. Mr. Musa, am I clear now? Am I clear now? I want to know if I'm clear, guys. Hello, guys. I want to know if I'm clear. So if you can hear me, write something on your chat page there, so that I can see if we are together. Thank you. Thank you, Mr. Musa Nyabusan. I want to hear from you if I'm still stuck or you can hear me clearly. You want me to repeat again? Is it Mustafa? You can hear me. Thank you, Mr. Mustafa. I think, Mr. Nyabusan, the problem is not with me. The problem might be with your internet, because other people can hear me very clear, but you are the only person who cannot hear me. Thank you. If I was not clear somewhere, please let me know so that I can repeat. If I was not clear, if all of you could not hear me clearly when I discussed about the stages, if I was not clear, can you guys tell me? Okay, thank you. Mr. Arshad is saying that I should repeat shortly. All right. I'll do it again, guys. I do it again because I don't want you to miss anything. I don't want you to miss anything, guys. I want everybody to get something out of this. All right, let me share my screen again. Let me share my screen again concerning market stages. All right. I say, as I said, guys, that Forex market has got 4 important stages that every successful trader, every serious trader should know about. These 4 stages are very important to the extent that if you don't know it clearly, you don't know well about them, you might not understand better about the Forex market. You need to understand everything about these stages. Forex market has got these 4 stages, as you can see: accumulation stage, advancing stage, distribution stage, and the declining stage. Now, what is accumulation stage? By just a simple way of explaining, you can say accumulation stage is a stage that occurs before an advancing stage, or is a stage that occurs just before the market starts moving upward, or the market starts creating an uptrend. So, what is the purpose of this accumulation stage? Accumulation stage is there purposefully in order to collect as many contracts as possible, so that to accumulate enough liquidity, or to get enough liquidity, or to get enough momentum to move the market upward. So accumulation stage normally happens at the demand zone. Accumulation stage happens at the demand zone. Some people call this stage range market or consolidation. Why is it happening? Why is the accumulation stage? Just like you can see the name, accumulation, accumulate, in order to accumulate contract, to accumulate position. Because at this stage is where there is stop hunts. Market makers are looking for contracts that people are making, are putting in the market. Because at the accumulation stage is where positions traders take their trades. It's where buyers take their trades. It's where people trigger their position in the market. So what the market will be doing is to hunt those positions, to hunt those positions that have been placed, either pending order or market execution, to get enough of those positions, of those contracts, in order to move. That's very important, guys. At this stage, you know, because many people do not understand what is accumulation stage, you can see some people will be selling at the accumulation stage, which is a terrible mistake. You cannot be selling at the accumulation stage, because accumulation stage is a demand zone. It's a place where buyers are expected to buy. See, guys, so you cannot sell at the accumulation stage. So market makers will be looking for those people who do not understand about this. So those people will be making mistake at the accumulation stage. Because if they are selling at the accumulation stage, market makers will hunt their stop loss, their position, will hunt their stop loss, and hence find enough liquidity in order to reward the few buyers who took the position in the market, who took the right direction of the market. So accumulation stage starts, then after accumulation stage follows advanced stage. Advanced stage is a stage that follows after accumulation stage. In fact, the advanced stage is an impulse level where you can see a lot of strong, long candlestick taking over, moving to the moon. Why? Because the market now has broken outside of that cage of accumulation stage, and now the market is now trending to the moon. It's going up to the moon. It's now creating an uptrend. That is an advanced stage. After the advanced stage is over, we have what we call distribution stage. Distribution stage always occurs at the what? At the supply zone. Distribution stage is the stage that follows after advanced stage. The stage that represent sellers in the market. Because at the distribution stage is where sellers are looking for a bearish opportunity. So at this stage, the market will be just doing some kind of a consolidation, will be doing some kind of hunting in order to attract people to take a position. After a lot of people have put a position into the market, now the market makers will decide which direction to take. Now, it's obvious that most of the time we expect a bearish market, and that is obvious. Most of the time, the bearish market is what is expected, and that is leads us to what we call declining stage. Declining stage follows after distribution stage, and this declining stage is the one that we call downtrend. So these 4 stages of the market are very important, guys, because when you're looking at the market, you need to know at which stage the market is. That will help you to make a right or correct decision in the market. So I think that one is clear now. Guys, are we clear now? Can I move forward? Yeah, thank you, Mr. Arshad. Can I move forward, guys? Can I move forward? I need to get, okay, thank you, Mr. Musa. Okay, that's great. Now, let's move on to the next part that's very important for you guys to understand. Now we are going to discuss about trending market. Trending market, we have 2 parties of that we have to cover. Trending market, that is uptrend and downtrend. That's very important. And you know where uptrend is coming from. It's coming from accumulation stage, guys. So uptrend, sometimes we call it advanced stage. Downtrend, sometimes we call it a declining stage, because declining stage or downtrend is a result of what? Is a result of distribution stage. So those things are very important for you guys to master, so that you can, when looking at the market, you can clearly see what the market is doing. It's very important. Now, I want to share my screen now so that we can go practically. We have to go practically, not just wait. We have to go practically into the market now. All right, guys. Here I got my guy. Here I got one of my friend, and this is what? This is GBP USD. People call it cable. So GBP USD, pound USD, pound US dollar. And what are we going to look at? We're going to look we're going to find all stages, all 4 stages at the market. We have to find accumulation stage in the market. We're going to find the accumulation stage. We're going to check for trending market. If there is a kind of trending, which means advancing stage of the market. We're going to look at the distribution stage of the market. We're also going to look at the declining stage of the market. By covering all those 4 stages, that means we'll be covering trending market and the ranging market all together. All right, guys. But before I bring you to the real stuffs, let me do something here, guys. Let me do something. Before going to the real stuffs, let me do something here. Let me do something here, guys. I need to show you something. All right, guys. Now, when discussing about, forget about this chart. Just focus on what I'm drawing. Accumulation stage is just like this, guys. Accumulation stage is just like this. Accumulation stage is just like this. You see, just like this. So you can see the market. You can see the market kind of behaving in something like a box. You can see. See, guys. Let's consider this now as your support. See, guys, it's very important. So now this is accumulation stage. When the market decide to break, out of this cage, that means now the market is telling us is going for advancing stage, advancing stage, retest, then have this kind of thing. We have this kind of thing. We have this kind of thing. Before taking to the real stuffs, let me show you what is exactly we're going to look at. This is very important, guys. It's very important for you to understand this. Now the market has made a very clear uptrend there. Now after reaching at that stage, now the market start doing its kind of stuffs. See, market will decide to do some sort of things like this. We're going to check this, then we're going to the real stuffs, because the real stuffs is not exactly the same as you can see what I'm drawing here. The real stuff is something else, guys. So you need to understand this, and then we go to the real stuffs. So you can see this is now distribution stage. This is now distribution stage. So what I mean, guys, here the market was trending. Market was trending, creating high. You can see the market creating high. You can see the market creating high low, high low, high low. Then distribution stage. After that, you can see the market now break out of the cage. The market has made a breakout out of the cage. Now the market start what we call the cleaning stage. We call the cleaning stage. This is a declining stage, guys. This is a declining stage. We call it downtrend. So after the market is there, you can see now The market doing the same thing again, doing the same stuffs again, creating another accumulation stage, waiting to move up again. That's what the market is doing. You know, if you look at the market in this way, if you look at the market in this way, you will see opportunity. I'm not saying you will see the same thing happening in all pair, but wherever you see something like this in a pair, that means that is your opportunity. You take that as your opportunity, guys. The market, the dealers cannot allow all things to be very clear just like this. But if you come across this opportunity, you take it. You see, guys, it's very important. That's why we're learning a lot of stuffs in the market, because we want to have a lot of eyes, so that when we see an opportunity that is compatible with what we already know, we regard it as a what? As a golden chance. Then we take our position. All right, guys. So this is what? This is now accumulation stage. This is advanced. We call it advancing stage. At this point, what you see here, this is a distribution stage. It's a distribution stage that happens at the supply zone, indicating a bearish market. Then we have a declining stage, which is also known as a downtrend. You can also call it a downtrend. You can see there is a creation of high lows, low low, high lows, low low. You can see here we have high highs, high low, high highs, high low, high highs, high low. Here we have high low, low low, high low, low low, high low, low low. Then those are that is how the market is keep on moving every time in the market. Guys, now keep an eye on this. If you find the market at this stage, accumulation stage, and you find it in the demand zone, in a strong demand zone, guys, you should be looking for what? You should be looking for bullish opportunity. It's very important. Sometimes the market might do some kind of false breakout on downside just to collect contract, but this is a bullish opportunity. So don't be trapped. Don't be trapped by the market maker. Don't be manipulated by the market maker. You have to concentrate. You have to make sure that you trust the process, guys. Make sure you trust the process. You might take a position at this point, thinking that now it's going to buy. Maybe you took here, you're thinking that it's going to buy, but when it reached at this point, and if you had your stop loss somewhere below here, you see the market. You see the market doing like this. You see the market coming down, take your stop loss, then up. So, guys, you have to be very careful when trading at this point. You have to make sure you know that this time I can just take my trade confidently without any worry that the market will do some hunting. So how do you know that the market will no longer do some hunting again? Wait until you see the market has done a hunting already outside of the box. Once you see the market has already done a hunting outside of the box, that means it has already collected and a lot of contract, and it has already taken people out of the picture, and now it's going up. So once you see the market has already done a stop hunt, it's a signal that it's a safe trade to take, and you can find a suitable place to put your stop loss. That's very important. Now you can see the market started up, down, up, down, up, down. What are the use of this down or this high low? This is high, this high low. What are the use of this high low? High lows are the opportunity for the re-entry. High lows are the opportunity for the re-entry. Maybe you missed this movement here. You missed this impulse movement here. But when the market is doing a pullback to create a high low, you might take a trade again. So you have to draw this this trend line like this in order to know where at which dynamic support and resistance the market will be behaving. Remember, the one you see up there and the one you see below here, these are the dynamic support and resistance. Those are the dynamic support and resistance that moves with the market. So the market will be moving in the channel, but this one acts as a resistance and this one acts as a support. So once you know that the market behave and you respect these areas, that means you have a greater chance to know where to put your re-entry or to add more position in the uptrend. It's very important for you guys. So remember, this is something that I wanted to explain before we move to the real stuffs. Guys, do we have any question there before I proceed to the real stuffs? If there is anyone with any question there before we proceed to the real stuffs. You now know practically that this is now accumulation stage. This is now advancing stage. This is now distribution stage. This is now the cleaning stage. Mr. Musa, your question, please. May I take your question? May I take your question? I don't mean, guys, I don't mean that we are done. We are still going on this because I'm now taking you to the real stuffs. I'm now going to explain those stages using the real stuffs. Okay, no question. Okay, I think that is what you meant. Nice. Now let's move now to the real stuffs, guys. Let's now move to the real stuffs. Okay. Let's now move to the real stuffs. Okay, great. Okay, we are now coming to the real stuffs, guys. We are now coming to the real stuff, and this is the real stuff. I want us to check this one. I want us to check out this one, guys. This is 4 hours. This is 4 hours time frame. This is 4 hours time frame. I like very much to do my analysis on 4 hours time frame. I'm not saying you cannot do it in another time frame, but for me, I like very much to do it on 4 hours time frame. All right, guys. I want to check this one here. I want to check this one here. This one here, guys. I want somebody to tell me, could you tell what the market was doing here, or at which stage the market was when it was doing this kind of stuff here? You see, guys, it's weird. It's very strange to see what the market was doing. You cannot tell for sure if the market is trending or it's doing some kind of consolidation or what, because we see very, very small candlestick, very, very small. But seeing this kind of small candlesticks with long wick, long shadow, as you can see, it's a signal that the previous trend, the previous downtrend is now coming to the end. If you see these small candlesticks forming, and the market is a kind of undefined, moving up, down, and it's kind of, you don't know if it's going up, it's going where. If you see this kind of stuff happening in the market, guys, know that the previous trend is now coming to the end or has lost momentum, and now we are at the stage where the market makers are doing their thing. The market makers are doing their thing in order to collect as many contracts as possible before they make the move. It's very important for you guys to understand this. It's very important. Since we already covered about chart patterns, you can tell me that this one here is a W pattern. For sure, this is a W pattern. The market created this kind of W pattern here before it went up. You see, guys? But before this W pattern, see what the market was doing. Let's say we had a person who just came into the market and find the market was at this stage. Let's say this one. The market was somewhere here. Now, let's say this thing is not there. Let's say this thing here is not there, guys. Let's say this thing is not there. You know what I mean? And you find the market is just forming this kind of stubs here. Let's say this stubs is not there. Let us regard just this one. You see, if you draw this, if we draw this, if we draw this, okay, what kind of this? Let's take the more touches, the more touches, the more touches. Let's regard the more touches. Let's regard the more touches. We have a touch here, and touch here. But if you take this one, we just have a touch here and here. But you can also consider that one because it's not about the point, it's about the area. You might also consider this one. Okay, let's do this. Let's draw the way it's supposed to be. Let's consider this one. Just draw the wick, just connect up to where it is, this point here. Just consider this rejection, this. Now come just below, just below. Consider this one. You see, guys, consider this one. We have this kind of stubs, and inside this we have another stubs. We have another stuff here. 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 So guys, this was a kind of ranging market. This was a kind of ranging market, but we have extension of it. You can see we have extension. We have this. You can see this, guys. But you can see this one extending to this point. See, guys? And if we open this door, if we decide to open this door, you can see there was something else. There was something else there. Why regarding that? Because we have something else down here. You see this extension from this point to this point, from this point to this point. Why am I drawing that? Because what we see here is a trending market. The market has already created a lot of what? Of strong long candlestick. Now it's an upward movement. Now it's an uptrend created. But we have to see what was the behavior of the market before this movement. The behavior of the market started here. There was a kind of ranging market with extension. This is an extension of the ranging market. But if we decide not to consider that one, let's focus on this one. You see this? You see this? Please, anyone, I can see someone is drawing, is doing some things on my on this chart. Please stop drawing this stuff, guys. Stop drawing these stuffs. Stop drawing. Stop drawing on the chat, please. Stop drawing on the chat. Stop drawing on the chat because I cannot do anything if you keep drawing this. I'm the only one supposed to draw. Don't draw anything. Please delete these stuffs. All right, guys, let's move on. So you see this stuff, guys, and you can see something else there. Let's regard this, the closing price. The closing price. You can see the market was kind of ranging. You can see. So this one is not very clear, but it's not very clear kind of consolidation or accumulation stage, but it's very important for you to understand this, because if you understand the behavior of the market before the market started advancing stage or declining stage, it's very important, guys. You can see the market created this kind of pattern, kind of inverse of head and shoulder. There were people who thought now it's time to buy, and they bought, they made money. Just consider a person who just went in, he bought this up to this level, more than 100 pips, more than 150 pips. You see, guys, but see what the market did. The market did another stop hunt move. This now, the breakout above this accumulation stage, the small one and the large one was not a true breakout. So you have to wait to see if the market will create another pattern. This was a clear inverse of head and shoulder. This is the head, this is the left shoulder, this was the right shoulder. But you can see here the market now disobeying or going against this, and now creating another outlook, another way of looking at it, which is a W pattern, double bottom, but a double bottom that is not equally. You see, this one is up and this one is down. That means at this stage, at this extension, market makers, all the dealers, they were intending to extend this one. They intended to extend this one in order to collect as many contracts, so that to have enough liquidity to push them back to the top. So what they did, they extended this, and they created a pattern that is quite different from the previous one. And now you can see a multiple pattern formation at this level. You can see this is double top one, double top two. See this double top, which is a W pattern. Now, after this, you can see what the market did. Now, at this point, if you want to clearly understand this pattern or this accumulation stage, you have to draw to extend this line here from where the market dropped to create another bottom, so that to create a double bottom pattern. If you extend that, this one now stand as a neckline. And you can see that the market behaved very properly at this stage. You can see the market made a true breakout, then it made a retest. After retest, the market kept on moving upward, showing us that it is indeed an uptrend. And I want to tell you guys, the behavior that is shown by GBP USD, the behavior that we see on GBP USD, it is likely the same behavior that we can see on GBP JPY, on GBP Swiss franc, on GBP Canadian dollar, and on GBP NZD, on GBP Australian dollar. The same behavior will be seen there. So it's very important, guys, for you to understand about these steps. It's very important, guys, for you to understand about these steps. You can see the market started to decline, to create some accumulation. After creating some accumulation, now you can see the market made a kind of false breakout, showing you guys that it's now an uptrend. But very unfortunately, it was not a true breakout, and the market was pushed back in order to take people out of the market, buyers, in order to decrease number of buyers in the market. by hitting their stop loss, because I'm very much sure that if people took their trade at this level, that means the stop loss was somewhere below the head of this pattern. So there are people who set their stop loss below this head, thinking that the market might not return here. But you can see the dealers, because they can see your stop loss, they did what they're supposed to do. They just came back, hunted your stop loss, and guess what? Boom! You can see the market going back to the rightful direction, to the true direction of the market. So what I'm trying to say here, guys, is what? What I'm trying to say here is understand this accumulation stage, understand this stage. Then now let's take a look at the uptrend. The market now is trending, it's going up, and now you can draw now. Now you can draw now, line just like that. If we just consider this, okay. All right. Okay. All right. It's not very clear, but you can see this is how the market is behaving inside this channel. You can see pub. You can see this was a kind of retest. So I expect the market to come back, maybe to do a retest on this neckline before moving up, or somewhere here, somewhere there on this trend line, then keep moving up. So these are the potential area where you can find the re-entry. So just wait until you see the market hitting at this level or at this point, then you can take your trade on bullish bullish direction. So this is still a bullish opportunity on GBP. And I want to show you something else, guys. I want to show you something else. This one will be discussed more when we come into discussion about what to consider when selecting a pair for trading. When selecting a pair for trading. Now, if we come back, if we take GBP USD, if we take GBP USD if we take GBP USD, sorry, if we take GBP USD on monthly time frame, you can see why it was indeed supposed to be an uptrend. If you go to monthly time frame, you can see. You can see, guys, this is the monthly time frame of GBP USD. You can see GBP USD is at the surface. It at the monthly demand zone. It's not actually monthly. It is many years demand zone. Because if you take this cross share and just check at this point, you see this was 2017. If you just go here, it was 2016. If you come here, it was 2019. This is 2019 now. So you can see the market hit at the lowest, at the low of all the time. The market just hit at the low of all the time. So it was very obvious. It was very obvious that now the market will change the trend. The market has to change the trend. And that's why, guys, GBP USD should be an uptrend. And we are buying this. The most important thing now is to find re-entry by drawing the way I was doing here at the 4 hours time frame. You find the re-entry, you wait for pullback, then you find the re-entry, you take your trades on bullish. So it's very important, or it's very good to buy this GBP USD than to sell. Why? Because we already know it's an uptrend. So we have to act according to the trend. We have to trade following the trend. Guys, trend is your friend. You have to find the trend of the trade or of the pair before you decide to take your trade. Once you know the trend, then it's very clear now that you can take the trade. So it's very clear that here we have a neckline. Here we have a W pattern. Now we have already confirmed about this accumulation stage, and now we have what? Uptrend. How do you trade this now? You just focus here, guys. Just focus here. Consider this. You might not draw the one on the top, but this one is very clear. It's very important. You can see the market will be behaving at these levels. If not at this dynamic support, then if the market made a breakout there at this dynamic support, that means it will hit at this point where there was a neckline. But we already had a retest. So I'm not very much sure that if this market will come back to hit this neckline again, because we already had two retests, this one and this one. Actually, it was not two, it was three. 1, 2, 3 retest. So the obvious area where you can take your trade is this one. In fact, if someone already took the position at this point, you'll be already in profit, because it's the same place, it's exactly the same area where you can take your re-entry on buying GBP USD. I hope guys you were clear on that. I hope that one will not confuse you, and you will make a proper use of this concept. It's very important. Now guys, let's see if we have a clear one. Let's see if we have a clear one. Let's go to Euro Swiss franc. Let's go to Euro Swiss franc. Guys, this is Euro Swiss franc. I think you remember my position yesterday. I was selling Euro Swiss franc, and we had that. I think Euro Swiss franc is kind of convincing, but we have a lot of steps there. We have a lot of steps to consider. Because this is now ongoing trend. It's a downtrend that is still ongoing. It's a downtrend that is still ongoing. So it cannot give us a very clear picture that we want to look at. But to make it in a way that you can understand, you can see the re-entry, a consolidation, or kind of distribution. Kind of distribution stage that will give us re-entry on downtrend. Re-entry on downtrend, you can see this kind of distribution stage. This one will be here. So you can see this is very clear, a distribution stage. You can see this kind of range market. You can see this kind of range market. You can see, guys, the market ranging. The market ranging, creating some kind of patterns, like triple top. Then after that, we had a fall. So this is another scenario, because this is on Euro Swiss franc is ongoing downtrend. We have not yet come, or we have not yet seen as many evidences as possible for bullish market, although we are just at the moment of expecting an uptrend on this, because we are going to finish this downtrend very soon. Then from there we're going to have another accumulation stage before we move up. So this is the distribution stage on this. Then we have a falling on this one. So this one is not very clear on what we want to discuss, because we want to discuss about uptrend before we come to downtrend. Maybe this one will help us somehow. You see, guys, we have this stuff here. This is Canadian dollar, Swiss franc. This is Canadian dollar, Swiss franc. You can see exactly what I was just saying. You can see exactly what I was just saying, guys. You can see this is what I was just saying. Just consider this. If you found or you came across the market at that level, and you see the market creating this kind of thing, guys, you have to consider as the more touches, the tuning the line that you draw. The more touches, the tuning the line you draw to show the accumulation or distribution stages. You see, guys, these touches, these touches. You see these touches, many touches you see there. After those touches, you can see the market. Of course, there was some kind of stop hunting, but you have to consider the touches. But after that, you see the market now deciding to come out of this cage. The market now decided to come out of the cage, doing some kind of pullback there. Then you see a huge movement there. You see the huge movement there, and you can see a retest. If you decide to extend this line, that means this one will be a retest on this level, a retest. Then the market continuing with its uptrend. So this is a kind of thing that I want you guys to understand the behavior, or to use the previous behavior of the market or the current behavior of the market to know exactly where the market is heading. So this one is an uptrend. Canadian dollar Swiss franc. Canadian dollar Swiss franc is an uptrend, and that is how we draw it. So at this level, you see, guys, at this level, how do you now draw the trend line? You see, you draw it like this, guys. You draw it like this, showing that this is now your uptrend. This is now your uptrend. The market will be behaving at what? The market now will be behaving at this dynamic support. You see the market behaving at this dynamic support. Now it's going up. Maybe it will reach at this point. Maybe it will reach at this somewhere at that point, and then it will come back again. It will come back again somewhere. It will come back again somewhere. Maybe here. Then going up again. So it's very important for you guys to know about that. It's very important, guys, for you to know about that. So I'm very much sure that on this area, you already know how it goes. So this explain more about uptrend. Guys, we might have something else here on USD JPY. You see USD JPY creating a horizontal. You can see this is a clear ranging market here, guys. A clear ranging market, creating a ranging market inside the box. You can see how the market is doing it. But we have this extended ranging market, but we also have this one here, which is a small one. This is a small one. It's very important to consider all possibilities, guys. It's very important to consider all possibilities, because you can see the market behaving at this stage, behaving at this stage here, behaving at this stage here, also behaving at this stage here, and behaving at this stage. This was a sideways. This was a range market, guys. This was a range market. So it's very important for you to understand about this. This is a range market. We have another way of doing it. Because we have a smaller range market inside this huge range market. You can see the market behaving like this here. You can see the one there. You can see at this point, but you can also see at this point, you can see at this point. I don't like trading. I don't like trading on range market because it's boring. It's boring, guys. But you can see range market is exactly the relation of distribution market. but we can see after breakout outside the cage, you can see we expect a retest, and you can see the making a retest here. You can see the market making a retest there before continuing with an uptrend. So this is now a clear uptrend, and you can see, guys, you have a chance to draw. You have a chance to draw your trending line, so that you can see where the market will be behaving, the dynamic support of the market. You can see at this point as well. So those are the important areas or important stuff to understand when trading. You have to draw so that you can understand what the market was doing before that movement, and at which level now, or at which state now the market is. Why should I buy at this point? Because the market has already done a pullback, and it has already done a pullback at what? At this trend line, which is a dynamic support, and the market is up. So it's very important for you guys to know about that. We have looked on the accumulation stage or range market on demand zone and uptrend. Before now we move to distribution or range market and downtrend, I would like to know if, guys, we are together and if we can still move forward from there. No. Guys, this happens happens not only on long-term traders. Mr. Musa was asking a question. Does this happen on intraday or long-term traders? It happens even in 1 minute time frame. It happens even in 1 minute time frame. It happens even in 1 minute time frame. So the behavior of the market is the same. It keeps on happening on different time frame. 1 minute time frame, 5 minutes time frame, the same thing keep happening. They keep creating the same, they keep forming the same behavior, or they keep repeating the same steps, even in 1 minute time frame. So guys, you have to know that this thing keeps on happening, on different time frame. But maybe I should add something else. Range market or accumulation stage, most of times it happens on Asian session. We call it Asian range. Most of time it happened on Asian session. It happened on Asian session. For those who have gone through market makers method course, they know that we have what we call Asian range. Asian range is a ranging market. You see the market behaving in a sideway. So the sideway market, we can regard, if it happened on accumulation area or accumulation zone, we call it, if it happened on demand zone, we call it accumulation stage. But if it happened on on supply zone, we call it a distribution stage. But they all are range market. They all are sideway. Sometimes it might look like a consolidation. So it's very important. Mr. Tom Kidd asking if accumulation does happen before formation of the W. No. You see, we do not put it that way, because sometimes the accumulation or distribution might be the pattern itself. Sometimes, please keep this in mind, sometimes the accumulation or distribution stage might be the pattern, the chart pattern that is formed, creating a certain pattern. So it's not that you have to look for the accumulation. No, the pattern itself, it might represent the accumulation stage. It might be triple top, triple bottom, double top, double bottom, head and shoulder. So it might be the same pattern that is representing accumulation or distribution. So it's very important for you to understand that. But since you already know about that, I think it will no longer be a problem for you guys. Mr. Tomkin, are we together? Yeah. Mr. Mr. Nelly Kabodo is asking, can we use range to take a trade? Yes. You know, I will see how I'll see how I will teach you how to trade on range market. But if you want to really trade on range market, you have to consider larger time frame. Why? Because on larger time frame, you will see a picture of a range market. And then from that, when you come to smaller time frame, it will not look like a range market. It will just look like a trending market. But in a larger time frame, is a what? Is a range market. In a smaller time frame, it's no longer a range market. It is a trading market. So you can trade a ranging market at larger time frame, but using use a smaller time frame, which will look like a trending market. So that is what is important. I'll come to teach you about that. Mr. Arshad is asking, can I say 2.2 advanced as manipulation? No. Advanced stage is not a manipulation. But before advanced stage occurs, you might see a stop hand before advanced stage occurs. Let's go back to our example. If we go back to our example of GBP USD, you can see on GBP USD, this was GBP USD. You can see this was a neckline. You can see here, guys, this is our W pattern, before this huge move. You can see now before uptrend, before advancing stage, before the occurrence of advancing stage, before occurrence of this advancing stage, you can see what? You can see the market just made a breakout on the previous, the so-called head and shoulder pattern, If this one was not there, that means this one was a pattern, was a bullish pattern, head and shoulder, inverse of head and shoulder. You see? So the market decided to make a breakout above the neckline. So many people now said, wow, it's now a buying opportunity. So they came back and put the stop loss somewhere below here, thinking now it's now a clear uptrend. But you see, guys, this market here made a breakout of the neckline, but it never did a clear retest on this neckline. So when it was keep going up, you were supposed to trade, but be careful. You are supposed to take some profit and wait for clear retest. You can see the market made a clear retest, yes, but this clear retest could not hold the pressure of sellers. You can see the bears kept on pushing the market down. Why? Because here, this one here, it was a false breakout. And this pattern here was not a true bullish pattern form. And that's why it was deformed, and another pattern was created, which is a W pattern. You know why this one was deformed? Because even the dealers know that you guys are taking the trade after knowing that this is a inverse of what? This is an inverse of head and shoulder. They know that you guys know about this pattern. So they know that you guys will be taking the trade on buying. They know that after retest, you say now it's time to buy full margin. They know. So once you are in full margin, it's when they do this kind of stuff. So it's very important, guys. It's very important for you to act very slow and to be patient. Now, I'm not saying that it was not safe to take a trade here. It was safe because everything was clear. But you can see, guys, it required you to be very patient, and it required you to apply another technique, which was not to use stop loss. Now, let me stop there a little bit. You know, most of the times, many people think that trading with stop loss is the only way to be a winner in the forex market. No, sometimes trading without stop loss is another way to become a winner in the forex market. I'm not suggesting that you guys should trade without stop loss. Guys, trade with stop loss. Always trade with stop loss. I'm not here to suggest that you should not trade with stop loss, but I'm here to teach you another technique. If you become a pro trader, if you become somehow pro in this industry, sometimes if you become pro, what do I mean? Because if I take a look, if we take a look on this market on monthly time frame, it will convince you not to use stop loss. Why? Because we already have a pin bar on the monthly time frame, previous pin bar, which suggests that no matter what happens, the market must buy. And we also have another confirmation that the market is now at the low of all time. So if you become a pro trader, you could not use stop loss when you entered this trade, at this level, after retest here. Don't apply stop loss. Why? Because if you apply the stop loss, you see what happened. The market was pushed down and you are taken out of the market. You are no longer in the market and you are in a huge loss. But for a pro trader, could hold the trade, be patient enough, you can see the reward here, guys. This was the reward. This was the reward. So you have to trust the process, guys. You have to consider that. That is very important. Okay. Maybe I should take some few questions before we proceed. Okay. So, Mr. Arshadi, advancing stage is not manipulation. You have to understand that. I think we are clear on that. Mr. Kamugisha is asking, when trading advanced stage and the decline stage, where do we take the profit? Where do we take the profit? Okay. Now, that question will cause me to discuss some things that I'm not supposed to discuss now. Because, guys, we have what we call market makers method and the market makers codes. We have the 3 levels of the market, 3 levels of the market that are expected before we say now it's the end of the trend. So advanced stage, we move to 3 market makers or dealers levels. After those 3 dealers levels, it's now the time you can say, I have to get out of the market. But for intraday trader, you have to focus on your goals. You have to focus on your targets and find the re-ent another day. Find the re-ent another day. Or find the re-ent after a pullback. Because I think you, as an intraday trader, you focus on making 20 pips, 20 pips, 50 pips, 100 pips per day. So it's very important to focus on your targets. Don't hold a trade just because I say it has to complete 3 stages and you do not have a capital to hold. Sometimes if you do not have a capital to hold, the market might do some move due to fundamentals that might take you out or might wipe out your account. And I don't want you guys to blow your account. So it's very important for you to consider that. It's very important for you to consider that. Okay. Okay, another question before I proceed. If you have any question, guys, I want to proceed into something else. I want to proceed into something else. Question. Okay, thank you, Mr. Arshad. We are clear. We are clear. Another person, if we have question, please. If we have question. If we have question, may I take clear? Thank you, Mr. Herod. Clear. Okay, now let's move forward, guys. Let's now go to look at the distribution and downtrend. Distribution, downtrend. In fact, it's the same steps. It's the same thing. It's just the opposite of what I've already explained. It's just the opposite of what I have already explained. So what we are going to do here is just the same steps. Just the same stuff. just a little bit opposite of what we've already discussed here. Okay. Okay, guys. Okay, guys. Maybe I should consider this one. Maybe I should consider this one. Maybe I should consider this one, guys. This is gold. This is gold. Gold. You see gold, guys? Gold started the movement from this point. Of course, it's not from that point, but you can see the nearest movement, the nearest move of gold. The nearest move of gold was at this stage. The market created some sort of what? Some sort of accumulation. The accumulation might be sideways or in a horizontal way. So this was a sideways accumulation. See, guys, after that, you can see the market making an uptrend. So you can see the market making an uptrend to that level. So it's very important for you to consider that, guys. The market made an uptrend there. But what we see now, the market doing after uptrend, that was an advanced stage. The market now has been exhausted. The uptrend has been exhausted somehow. And you can see now the market creating, this was, let's draw this, the huge extension. You can see this kind of what? This kind of sideways orange market. This is a distribution with stop hands included. Stop hand included. You can see the market doing something like that, guys. And you can see the market doing something like this, guys. Okay. So you can see the market behaving from this point to this point, this point. You see the market doing something like that. I'm not saying that the market will come back to this point very direct like that, but I have to consider something else here. You see this, guys? You see this? I have to consider the more touches. The more touches will be somewhere here. The more touches will be somewhere here, this area. Remember, it's not about the point. It's about the area. So I have to draw somewhere there. So you can see this is the big picture of this ranging market. This one here, the other picture, the condensed part of this range market, condensed part of this market. This is the extended part of this ranging market. You can see, if you look very careful at this thing, distribution stage, you can see a clear pattern, which is what? Which is head and shoulder formation. You can see this. We can regard this one here as a head, and this one here as a left shoulder, and this one here as a right shoulder. So if the market decide to make a move, maybe I should shift this one here. If the market decide to make a move up, I think it has an opportunity to make a move up to this point, maybe to do a retest there, but we have a potential bearish market here. Now, let me show you. Someone asked the question, how do we trade? How do we trade what? How do we trade a range market? Can we trade a range market? Yes, you can trade a range market. How? You can draw just like this, and you consider these levels, this as a support, this as a resistance, and this as a resistance. So you can see how the market is behaving. You can see the market behaving at this point, and down here, and maybe this one might move up there, but bear in mind we have another rejection. We have another minor rejection. Bear in mind we have another minor rejection here. So it might not move up to this point because we have a rejection there. So it might be like this. The market might behave this way at this point, then this point here, this point here, then down. Then instead of going just up to that point, it might reverse. It might reverse and come back here. You see, guys. So this is what I'm expecting. This is what I'm expecting. Still, the market to move up to that point, it might reverse, come back down here. So this is how you trade. This is how you trade. You have to consider all possibilities, guys. Any breakout outside this huge range market here, huge picture you see there, it might tell us that we are going on a declining stage. We are going on a declining stage. We are going on a declining stage. So this is how you look at it, guys. Distribution stage is the stage that happens after. The stage that happens after what? After advancing stage. Now, maybe we can just take a look at. We can just take a look at another thing as USD Canadian dollar. You can see USD Canadian dollar on 4 hours time frame, guys. 4 hours time frame. You can also see this thing happening. You can see this thing happening. We have this small picture, but we also
share the screen.
We also have this big picture.
Share the screen. So share the screen.
I'm sharing the screen. Can't you see the screen, guys? Okay. Okay. Okay, guys. Okay, guys. Okay. So I think we have an internet problem here. Let me share the screen. Let me share the screen. We are now discussing about what? We're now discussing about USD CAD. Now you can see USD CAD. We have this extension. We have this small condensed picture of distribution stage. We have also this huge picture here. I have this huge picture here. Huge picture here, guys. We have this huge picture here of which goes direct to this one, and this one. But we have this condensed picture, accumulation stage, condensed one, accumulation stage, which represents this one, represent that one, guys. Present that one. You can see these more touches. You can see these small touches. You can see this huge one here, and you can see this one here. So we consider this and this. We also consider this one. You can see this is a condensed. This is okay. So now, how do we look at it? Remember, USD CAD, although we had a very good bullish opportunity, but it's according to this picture now, it's we have a bearish opportunity, a small a kind of bearish opportunity before we move to the bullish opportunity again. Right? You see here, guys. You see there, we have a what? We have a distribution stage. We have the market behaving, obeying our distribution stage. You can see the market behaving according to our distribution stage. Now breakout happening, but you can see this was not a true breakout. The market coming back to the distribution stage. The market coming back to the distribution stage, but we have a rejection here. We have a rejection here, guys. We have a rejection here. You can see the market was rejected at this level. You can see we can expect some kind of bearish market. We can expect some kind of bearish market. But if you look at this USD CAD in a bigger picture, guys, maybe on monthly time frame, you can see that the market is on a kind of ranging market. We have no we had a clear uptrend. We have a clear uptrend here, but the market has entered into a kind of range market. Down, up, up, down, up, down, up, maybe down. We expect some kind of move like that, then up again. So we are on a range market. We are on a range market on a larger time frame. But on a smaller time frame, we can see something like a trending market. But in the actual sense, it's not a trending market. The market is behaving in the range market on a larger time frame. So you have to consider that as well. You have to consider that as well. So at this point, since we are at this resistance here now, we can expect some kind of move, of movement on downside before having another upward movement. So it's very important to consider that, guys, as we keep moving on that. Take a look at the Australian dollar USD. Australian dollar USD. Take a look at this. Take a look at this, guys. We have another thing there. We have another thing there that is look similar. We have something else that looks similar, but this now on uptrend. You can see this range market. You can see the way market behaving. You can see a range market. You can see a range market, guys. You can see this range market here. Although it didn't touch there, but it's an area, so you can see that range market, and you can see, boom, market making made a breakout. Now I expect the market to come back and do some retest there, and it's now coming back before continuing upward. So that's what we expect, guys, and that is what is going to happen. It's going to happen there. All right. So we also have other pairs, Euro8, Audi, and others, so many pairs. So guys, it's a lot of stuffs. It's a lot of stuffs. Maybe if we consider Australian dollar Swiss franc. Australian dollar Swiss franc, if we check it on monthly time frame, it is the same as GBP USD. It touched almost the low of all the time, the low of all the time. And now you can see on larger time frame creating a W pattern, but on smaller time frame, you can see we have this kind of stuff. We had a what? We had a range market down here. We had a range market down here, guys. Then boom. So the market at this point will do some kind of retest before continuing with uptrend. So guys, what should I tell you? We have a very good opportunity on many pairs. The thing that you have to be patient, and you have to consider and trust the process. And by saying so, I want to receive some few questions before I end up this presentation. Some few questions, guys, before we end up this presentation. Some few questions. I want to receive some few questions before we come to the end. Maybe I should ask, guys, are we together on that? Are we together on that? Because the next part is a homework. I want you guys to find me 5 pairs. Each one of you to find me 5 pairs. 5 pairs. Please identify accumulation stage and show me the advanced stage. Identify among those 5 pairs. Among those 5 pairs, 3 of those pairs identify distribution stage and show me the direction of the market after breakout of the distribution stage on downside. And 2 pairs identify accumulation stage and show me advanced stage, the direction of the market on an advanced stage, or uptrend, we call it uptrend, and show me how it's going to look like. Draw and send it to the group, mentorship group. I want to see everything in the group, guys. Please make sure you work on on this homework that I've given you guys, because it's very important, and it will help you guys to help you guys to work on it more practically than just watching and just leave it there. I hope it's very clear. And if we don't have any question, may I say God bless you. We meet tomorrow again here for another package. God bless you guys. See you next time. For those who have not subscribed in our mentorship, please make sure you pay for the mentorship. I can see some people who have not paid for mentorship and they are here. Guys, make sure you pay. I'm using my energy, my time. Make sure you pay so that you may move on. There are a lot of things that are waiting for us, and we have to cover that. And it will be not good for you if you miss an opportunity. Thank you, guys.